All right, let's talk about the big economic story that's got everyone talking. India just dropped an absolute bombshell of a growth number for the second quarter of its financial year, and it's a figure so high it caught pretty much every single analyst off guard.
So you're probably wondering, just how fast are we talking here? How big was this surprise, really? Okay, so this really puts it into perspective. On one hand, you have what all the experts thought would happen. Economists were betting on something around 7.2%. Even India's own central bank, the Reserve Bank of India, was a bit more conservative, projecting 7%. But the real number? Yeah, it didn't just beat those estimates, it completely blew them out of the water.
8.2%. Let that sink in for a second. That is a 6-quarter high. It's a powerful signal of some serious economic momentum, especially when you remember that this time last year, growth was sitting at 5.6%.
Okay, so we've got this incredible headline number, but what's actually powering the engine? Let's pop the hood and take a look at what's really driving this thing.
Well, if we zoom out a bit, the story is pretty clear. This wasn't some one-off fluke in a single area. No, the data shows this was a really solid, broad performance, with two parts of the economy doing the heavy lifting: industry and services.
And check this out. When you put this quarter's numbers next to last year's, the jump is just, wow. Manufacturing went from a pretty modest 2.2% growth all the way up to a massive 9.1%. And services as a whole jumped from 7.2 to 9.2%, with finance and real estate leading the charge at a staggering 10.2%.
But hold on, it's not a uniform story of explosive growth across the board. The headline number is great, but when you start to peel back the layers, a more complicated picture emerges. It's almost like a tale of two different economies moving at very different speeds.
And here's exactly what I mean. In one corner, you've got these absolute powerhouses, manufacturing, financial services, posting those crazy, almost double-digit growth numbers. But in the other corner, things are moving a lot slower. Agriculture, for example, grew at a more steady 3.5%, utilities at 4.4%, and mining, it actually shrank, just a tiny bit.
Okay, so we've covered the what. We know which parts of the economy are booming. Now for the big question, why? What's the story behind these stats? What's really going on here?
When you put all the clues together from what the economists are saying, it really boils down to three main things. First, people were out there spending money, a lot of it. Second, businesses were investing heavily. And third, there's this little statistical quirk that gave the numbers an extra boost, something called the base effect.
This is super interesting because it shows us who was driving the bus. You see, private consumption? That's just us, everyday people buying things. And that grew by a really strong 7.9%. Then you have investment. Think companies building new factories or buying new equipment, also very solid at 7.3%. But look at this. Government spending actually went down. So what does that tell you? This surge was almost entirely powered by people and businesses, not the government.
And if we dig in even deeper, one of the most important parts of this whole story is what happened in rural India. Demand there jumped 7.7% year over year. Now, that might just sound like a number, but it's the biggest leap they've seen in 17 quarters. That's over 4 years. This is a massive deal because it means the recovery isn't just happening in the big cities. It's becoming much more widespread.
All right, let's circle back to that base effect thing I mentioned. It's really important for understanding the full picture. Think of it like this. The 8.2% looks so huge in part because it's being compared to a much lower number, 5.6% from last year. The growth is absolutely real, don't get me wrong, but this statistical quirk helps explain why the number is so jaw-droppingly high.
Okay, so we've taken the number apart, we've looked at the why behind it. Now let's get to the so what. Why should you care? What does this actually mean for India going forward? Well, there are a few big things to keep an eye on. First, don't expect the Reserve Bank of India to cut interest rates anytime soon. When the economy is this hot, they're not going to want to add more fuel to the fire. Second, the RBI is definitely going to have to go back to the drawing board and raise its growth forecast for the whole year. And finally, the million-dollar question on everyone's mind: can they keep this up?
And this quote from Chief Economist Manoranjan Sharma really nails it. He says, consumption, again, that's just people buying stuff, is the main engine of the whole economy. It's responsible for something like 55 to 60% of GDP. That's why that strong consumer spending we saw earlier isn't just a nice to have. It's the absolute core of this whole growth story.
Which brings us right back to the biggest question of all. The momentum right now is undeniable. It's powerful.
But we know that some of that shine comes from the base effect, and that statistical boost won't last forever. So the real test starts now. Can India's economy keep its foot on the gas, or was this just a temporary surge? That's what we'll all be watching.